Students, so welcome to SKH Life Explorer. So today we are going to learn how to create ledger part 2. In this video you will learn that how to balance the ledgers, and we will see a couple of more examples for ledgers. So just begin. So students, we are talking about the definition of accounting. So accounting is the process of analyzing, recording, classifying, summarizing, and reporting the financial transactions. And we are at the part we are learning classification of financial transactions, which is step number 3 of accounting cycle. So students, first of all, you need to learn about what is accounting period. Accounting period is basically a period for which accounting records are prepared to calculate the profit or loss. For a business, a small street vendor, for that person, the accounting period can be 1 day, it can be 1 month, 6 months, or a year. For most of the companies, the accounting period is 1 year. For example, if the accounting period is starting from 1st January, it will end on 31st December every year. So we prepare the account starting from 1st January till 31st December, and on 31st December every year we close the account and we see whether our business has made profit or loss, and then the next year starts. We will talk more about accounting period in the coming video. So today we are learning, as I told you, how to balance the ledgers or T accounts. So here is the example that we did in the last video. So I have added a couple of more entries. So the reason to add couple of more entries is that, so whenever we have a transaction, if we are good with journal, we can directly post those transactions into ledger account. So we don't need to create journal first and then we post transaction into ledger. However, the principle will remain the same. So we will try some entries. So we will try to post the transactions into the ledger straightforward. So be ready. So the transaction number 1 we have already done, that on 1st January Mr. A started business with cash. So you can see that this transaction is reflecting in cash account as well as in the capital account. So in the second transaction on 11th of January, he bought furniture for cash 300. So in this transaction there are two accounts. The first one is cash and the second one is furniture. So in this transaction, you can see both accounts are involved, are belongs to non-current assets or the category of asset. So one in account is going up, the furniture is going up, so it should be written on the debit side. Same thing. So 300 is the amount. The date is 11th of January 2020, and the reason is cash. And the same transaction we will record in the cash, and this time cash is going out, so it will come on the credit side. But why it is going out? The reason is always the other account. So I will put the date here as well. So it is 11th of January 2020. Is that clear? So in this way you can see that I did not create the journal first, but instant I'm just posting the transaction into ledger account. Let's see one more example. So here the first transaction we already done, and now one more transaction we are doing. On 30th January, bought goods from Mr. John for 600. So it means that we are buying goods from Mr. John. So it is not a cash transaction, but it is a credit transaction. So first of all, we are doing it on 30th January. So two accounts are involved, purchases account and Mr. John account. So let's figure out purchases account. So purchases are always debit. So I will just write on the debit side 600. The date I will put 13th of January 2020, and the reason will be here Mr. John. Mr. John, we have to write the name. We know that the Mr. John is our trade payable, but we have to write the name because a business can have so many trade payables. So after doing that, we will be creating the account for Mr. John. So I will create the ledger for Mr. John here. And in this ledger, we will record that transaction. So I can give that ledger a name, and the name should be the same as the name of person. But for our reference, we can write in the bracket that it is our trade payable. So Mr. John is our trade payable. So in this transaction, as we are buying from Mr. John on credit, which means we have to pay him back. So Mr. John is our liabilities, and increase in liability is always credit. So I will write it on the credit side. I'll put the date here, 30th of January, and the reason is purchases. So if you want to just go see again, just pause the video and you can see that transaction, or you can just watch it again to see how I did that transaction. One more transaction as a recap. So we will do the balance then. Here on 14th January deposited 5,000 into business bank account. So in this transaction, again, first job to identify the account. So two accounts are involved, bank account and cash account. So as we are depositing money into the bank account, so bank account is going up by 5,000. So let's go back to our bank account. So bank account is going up by 5,000. The date is 15th of January, and the reason is other account, that is cash. And the same transaction should reflect in the cash account that 5,000 has gone out of our pocket. So 1st January it happened, and the reason is bank. So one more, on 17th January paid Mr. John by check. So we are paying Mr. John by check. So it's mean once we will pay him by check, Mr. John will not be our liability anymore. So decline in liability should come on the debit side. So I'll go to Mr. John account. I'll write the amount on the debit side, the date. Let me check. It is 17th of January. So I'll just put here date 17th of January 2020, and I'm paying it by check. So the bank account will come here, and in the bank account, as the money is going out 600, the reason is Mr. John, and the date is 17th of January 2020. So students, this is how we actually directly create ledgers from the transaction. Now I will show you how to balance that. So let's balance the furniture account. So students, to balance the account, I have seen many times the students actually struggle with the formatting of how to balance the ledger, as well as they face the difficulty that how we need to balance that. So guys, to do that, first of all, you have to see the amounts in debit column and the credit column. So in the furniture account, there is only one transaction that is on the debit column. So I will just do the total here for debit column, and the same total you have to write on the credit column. So the step number one, you checked which side is the bigger side. Second job, you write that amount on the both columns. Now you will subtract the smaller column from the bigger column. So a bigger column is 300 and smaller column is 0. So it means 300 minus 0, that will be called balance. So we call it balance, and the balance is 300 in this account. So this balance is called balance CF. CF stands for carried forward, which means at the end of the year, we had furniture for 300, and in the next year this balance will be shifted on the opposite side. So 1st January 2021, this will become again the balance BF 300, which means we started 2021 with 300 value of furniture, and the closing balance should be on the 31st December 2020, which means the last day of the year. So this is how we do the balance. One more example, let's do how to balance the cash. Now if you look at both sides, so you will know which one is bigger. So debit side is 10,500 while the credit side is 5,300. So in this case, we know that the debit side is bigger. So I will write it on the debit side. So it is 10,500 is the bigger side. So I will write it in both columns, 10,500. So first step, you write the bigger side bigger amount on both columns. Now subtract the smaller side. So 10,500 minus 5,000 minus 300. So the balance is 5,200, and that will come here 5,200. This happened on 31st December 2020, and this balance is called balance, correct, CF. And the next year, 1st January 2021, this will become balance BF, which means we started the year with 5,200 cash in our hand. This is how we balance the ledger. So you can see that I balance two ledgers here. Okay, one more ledger I will balance for you. I'll balance bank account. So in this bank account, you see which side is bigger. So we know that the debit side is bigger. So I will write debit side amount on the under the both columns. So maybe I need to create little more space here because one more tab I would need here. Okay, so I wrote it on the both side 5,000, which is bigger amount. Now we will subtract the smaller side. So 5,000 minus 1,000 minus 250 and minus 600. So it is 3,150. So 3,150 is our balance on 31st December 2020, and I will call it balance CF, and that balance will become balance BF on 1st January 2021. Balance BF brought forward and carried forward, we use these terms there. So it is 3,150. So I'll just add it here for the reference so you can note it down. So BF stands for brought forward, and CF stands for carried forward. So these two terms we use in the ledger. One more last example, Mr. John account. So in this case, guys, you can see that the debit side of Mr. John account is equal to credit side. So I'll write 600 here and 600 here as well. So in this case, there is no balance for this ledger. So if a balance has zero balance, that ledger is called zero balance ledger. So its balance is not forwarded to the next accounting period. So we can say this account is closed, which means we owe money to Mr. John and we paid him, so that account does not exist anymore. So that balance is called zero balance ledger. So students, if you got any confusion in the comments, you can ask me question. I can also answer you, but if you stuck somewhere, you can rewatch that video again. So next video we will be learning about a trade discount and cash discount, that how do we record journal entries for trade discount and cash discount, and how do we post those transactions in the ledger, and that is little bit complicated. So hopefully to see you in the next video. If you are watching the video, you like the stuff, please subscribe, like and share as well. Thank you very much.